My name is Ashley Hine, and today I will be presenting a case study on Brady Corporation for my financial management course at Wisconsin Lutheran College. William H. Brady founded the W. H. Brady Company in 1914 in Eau Claire, Wisconsin. The company started by selling products like promotional photographic calendars and expanded into color displays for ice cream parlors, printed glass beer signs, point-of-purchase displays, and roadside advertising. In 1939, Brady saw an opportunity to enter a new market, which stemmed from the need for the military to clearly identify wires on ships, planes, and other equipment in World War II. The company developed and produced self-adhesive, pre-printed wire markers that worked on 100-plus degree landing strips, or flying through sub-zero temperatures at 37,000 feet. This expansion led to them being incorporated in 1939. Brady expanded internationally in the 1950s, with operations and partnerships in Canada, Mexico, and the UK. In 1984, Brady went public and began trading on the NASDAQ market. They sold 500,000 shares of non-voting stock to avoid paying estate taxes due when the CEO's family inherited a stake in the company. In 1998, W. H. Brady Company became Brady Corporation, and in 1999 the company began trading on the New York Stock Exchange under ticker symbol BRC. Starting in the 1990s, Brady introduced software that allowed customers to create their own labels and printers to print on-site and on-demand. As technological capabilities grew, so did Brady's geographic reach. I found a quote on Brady's website that really summarizes their story. It reads, "More than a century of innovation at work. Trace our roots from a small promotional company in Eau Claire, Wisconsin, to a global leader of safety and identification products." The following details will give you an overview of Brady's profile. They are in the manufacturing industry, headquartered in Milwaukee, Wisconsin. They have 90 locations in 31 countries, which employs 6,300 individuals. Under the Brady umbrella, they have 19 different brands. Those brands have markets in electronics, telecommunications, manufacturing, electrical, construction, medical, aerospace, and a variety of other industries. Their mission statement is identify and protect premises, products, and people. As of fiscal 2017, they had $1.11 billion in sales. Brady is separated into two divisions: Identification Solutions and Workplace Safety. Identification Solution has approximately 70% of the sales. The products under this division are Safety and Facility Identification, Wire Identification, Product Identification, People Identification, and Healthcare Identification. The primary brands in this division are Brady and PDC. Their primary channels for sales are through distribution, which accounts for 70%, and direct to end users, which is 30%. Approximately 2/3 of the sales are through the U.S. and Canada. Workplace safety is approximately 30% of the sales. Products in workplace safety include signs, tags, labels, safety equipment, etc. The primary brands for workplace safety are Seton, Amedco, Signals, and Securamed. They sell direct through catalog, internet, and telephone sales. Approximately 2/3 of those sales are through Western Europe and Australia. The following are financial highlights for Brady's fiscal 2017. The 2017 fiscal year ended July 31st, 2017. Net earnings for the end of Brady's fiscal year 2017 were $95.6 million compared to $80.1 million in fiscal 2016. Earnings before income taxes increased 15.8% to $126.6 million for 2017 compared to $109.3 million in fiscal 2016. Earnings per diluted share were $1.84 for fiscal 2017 compared to $1.58 in fiscal 2016. Sales for fiscal 2017 decreased 0.7% to $1.11 billion compared to $1.12 million in fiscal 2016. Total organic sales did increase by 0.5%. By division, organic sales increased 1.6% in Identification Solutions and decreased 2% in Workplace Safety. Brady's current financial ratios for fiscal 2018 are as follows. Earnings per share is 8 cents. Earnings per share tells investors how much money each share of stock they own earned during the period. Compared to 49 cents this time last year, Brady's results were reduced by approximately 40 cents per share due to tax charges from U.S. tax legislation enacted during 2018. Dividends per share is 83 cents. Brady is currently on the 32nd consecutive year of dividend increases. Free cash flow is $116.76 million. Free cash flow represents the cash that a company is able to generate after spending the money required to maintain or expand its asset base. Free cash flow is what allows Brady to pursue opportunities that enhance shareholder value. Return on equity is at 11.4%. Return on equity measures the profit earned for each dollar invested in Brady stock. The higher the ROE ratio, the more efficient Brady is at utilizing its equity base. The price per earnings ratio is 25.52. The price earnings ratio indicates the dollar amount an investor can expect to invest in Brady in order to receive $1 of Brady's earnings. The current ratio is 2.41. This ratio tells investors Brady's ability to pay current debt without having to resort to outside financing. In this case, Brady has sufficient current assets to pay current liabilities without going to outside financing. Lastly, the debt-to-equity ratio is 0.1. The debt-to-equity ratio shows Brady's long-term debt as a percentage of its equity. A ratio lower than 1 is considered favorable and indicates Brady is relying more on equity than on debt to finance its operating costs. The current stock details for Brady as of April 18, 2018 are $38.10 for price per share. The market cap is at $1.97 billion. The 52-week range is between $31.70 and $40.25. The current dividend yield is at 2.18%. Brady's stock has a beta of 1.1 compared to a beta of 1 for the market, which implies that the stock's price movements are more extreme than the market as a whole. This stock has above average level of market risk, which means it is a good time to buy stock from Brady Corporation. In the beginning of this current fiscal year, Brady announced their capital management plan on how they plan to allocate their funds. One of their primary focuses is to reinvest capital back into the business in order to develop innovative new products, invest in capability-enhancing capital expenditures, and drive sustainable growth. Their other primary focus is committed to returning dividends to all shareholders. They are currently on the 32nd consecutive year of dividend increases. Once those are fulfilled, they will look further into share buybacks, which are going to be at intrinsic value. Lastly, they will review opportunities for acquisitions. Brady is only looking for acquisitions that have clear technological advantages that they can leverage. Brady confirmed in February 2018 that they used the current fiscal's cash generation to return funds to shareholders and to repay debt. They repaid $27.9 million in debt during this last quarter and finished in a net cash position of $44.1 million as of January 31, 2018. They also returned $10.7 million in dividends to shareholders. The increase in Brady's organic sales growth has been driven by the executives' team focus on operational efficiencies, gains in the cost structure, and a strong focus on cash generation. By the end of fiscal 2017, which ended July 31, 2017, Brady increased their pre-tax earnings by 15.8%, increased net earnings by 19.4%, and generated $144 million in cash from operating activities. They started this fiscal year with net cash being $26.2 million compared to net debt of $75.7 million. This has allowed them to invest an additional 19.3% in R&D, which will aim to improve a new product pipeline and continue to be a leader of innovation in the industry. According to Brady's CEO, Michael Nauman, they will continue to focus on the long term by taking actions today that they believe will result in sustainable organic sales growth into the future, which will drive long-term shareholder value. As an employee of Brady Corporation, I am excited to be a part of the positive growth and innovative change that are felt by everyone in the company. Based on the financial results described in this case study and the objectives the company has promoted to drive growth, I would invest in Brady Corporation.